All right, let's jump right in. Today, we're taking a close look at the biotech giant Amgen, ticker AMGN. And wow, its technical chart is showing a fascinating battle, a real tug-of-war between two opposing forces. So the big question on everyone's mind is pretty simple, right? Is Amgen bullish or is it bearish? Well, as you're about to see, the answer is not that simple. It's because the chart is literally telling two completely different stories at the exact same time. It's this massive technical tug-of-war, and our job today is to figure out which side might just have the upper hand. Okay, so here's how we're going to break it all down. We'll start with this tale of two trends. First, we'll look at the long-term bull case, then we'll flip it and look at the short-term bear case. After that, we're going to piece it all together for the overall outlook, and we'll finish up with the key price levels you absolutely need to be watching. First up, let's look at the big picture. When you zoom out on the chart, the evidence for Amgen's long-term strength is just incredibly solid. It's built on a really powerful foundation. So the first piece of evidence is this number, 1. What's that? It represents a perfect score for moving average alignment. That means all the major long-term trend lines are perfectly stacked and pointing up in unison. Honestly, it is one of the clearest signs you can possibly get of a strong, healthy uptrend. And check this out. This really shows the stock's underlying strength. The price is trading almost 20% above its volume-weighted average price, or VWAP. Now remember, this isn't just some simple average price. It's weighted by volume. That tells us a lot of buying has happened at lower levels, creating a really strong base of support. And the bullish story just keeps going. The ADX indicator, which measures the strength of a trend, is sitting at a really robust 29.09. That confirms this isn't just random noise, it's a well-established trend. Then you add a positive linear regression slope, which basically plots the line of best fit for the price, and well, you've got a long-term trajectory that is undeniably pointing up. Okay, but here's where things get interesting. Let's move to the other side of the story. If that long-term picture is so strong, why are we even talking about a tug of war? Well, when we zoom in on the recent price action, we start to see some cracks appearing in that bullish facade. So the first big red flag here is what's happening with the MACD, a super important momentum indicator. You can see it right here. The faster-moving MACD line has crossed decisively below the slower signal line. This is a classic bearish crossover, and it's a huge signal that short-term momentum has shifted to the downside. And just look at how close these two numbers are. It's wild. The positive directional indicator, that's the buying pressure, is basically neck and neck with the negative one, the selling pressure. This shows you a market in a state of almost perfect indecision. It's that literal tug-of-war for control over the next move. And the evidence for this short-term pressure just keeps piling up. We've got multiple other indicators flashing warning signs. For example, the Aeron oscillator and the CCI, both momentum gauges, have turned negative. Plus, the price is now trading in the lower half of its Bollinger Bands, and the parabolic S8R indicator is sitting above the price, acting like a ceiling of resistance. Now, this is where it gets pretty interesting. The stochastic indicator is way down at 22.82. That suggests the recent selling might be getting a little overdone, bringing the stock close to what traders call oversold territory. But what does that term actually mean? Okay, the easiest way to think about it is like a stretched rubber band. The stock's price has been pulled down and down and down by sellers for a while, and the further it gets pulled, the more tension builds for a potential snapback rally. It doesn't guarantee a bounce is coming, but it definitely suggests the bears might be running out of steam. All right, so we've got a powerful long-term uptrend on one side and some pretty significant short-term selling pressure on the other. How in the world do we make sense of these two conflicting views? Let's take a step back and put it all together to get the complete picture. This one sentence from the analysis, this is the key. It perfectly captures the whole situation. See, this isn't really a story of a bull trend versus a bear trend. It's the story of a short-term correction that's happening inside of a much larger ongoing bull trend. So what that means is this short-term weakness doesn't necessarily break that bigger, more powerful uptrend. A great way to think about it is like a river. The main river is still flowing strongly uphill, but right now we're just seeing a temporary whirlpool or an eddy right on the surface. And we can actually see this in the numbers. This idea of a pullback is confirmed right here. The long-term trend line predicts the price should be higher, but as you can see, the current price is trading almost 5% below that. This really suggests the stock is in a corrective phase, just pulling back towards its long-term average, not a full-blown trend reversal. Okay, let's make this really practical. Now that we understand the whole context, let's look at the specific price levels that are going to define this battlefield between the bulls and the bears in the days ahead. Think of these three levels like a price ladder. That central pivot at $323.38 is the main line of scrimmage. For the bulls to really get back in control, they need to push and hold above that first ceiling of resistance at $327.70. And for the bears to press their advantage, they've got to break the immediate floor of support down at $320.99. And all of this leaves us with the final really big question. Given that the powerful long-term uptrend is still very much intact, how should you interpret this short-term weakness? Is it a warning sign that the big trend is finally starting to break? Or is it simply a temporary pullback, creating a window of opportunity? The answer? Well, that really depends on your own time horizon.